Okay, so in this strategy, we're gonna use the MetaTrader. Once you open MetaTrader, pick the Euro US dollar chart. The best time frame for trading using this strategy is 15 minutes. But that doesn't mean you can't use this strategy for other currency pairs or markets too. To add the first indicator to the chart, head over to the Insert menu and from the Indicators and then Trends section, select the Moving Average indicator. Alright, now in the Parameters section, change the period to 10 and set Shift to 0. Then change MA method to exponential and set Apply to close. Now you can change the color and line style of the indicator however you like. In the next step, we need to add another indicator to the chart. So again, go to the Insert menu, then Indicators, then Trend, and select the Moving Average indicator. This time we need the EMA 20, so in the Parameters section, change period to 20. Set Shift to 0. Now set MA method to exponential and set Apply to close. And finally, change the color and style of the indicator so it's different from the EMA 10. Most beginner traders base their trades on these two moving averages crossing. So when the EMA 10 crosses above the EMA 20, they go long. And the same thing in reverse. When the EMA 10 crosses below the EMA 20, they go short. But as you can see in this example, this approach often gives a lot of wrong signals that'll lead to losses if you trade that way. The method I want to show you now though is my personal, simple, but effective strategy. It's accurate and profitable. But you gotta watch the whole video to get the full strategy and all the tips. So, the way we trade this strategy is a bit different. In this approach, when the moving averages cross, we don't immediately take a trade. Instead, we need to identify the most recent swing high or low. For example, after this crossover upward, we find a recent swing high. Now we wait for the price to break above this swing high. Once it does and a candle closes above the swing high line, then we take a long position. Similarly, after a crossover downward, we find the recent swing low and wait for a break below this swing low. Once a candle closes below that level, we take a short position at that candle's close. Essentially, with this method, we are entering trades based on existing structure in the market. But to make sure we always take breakouts in the direction of the main market trend, we can add a simple moving average indicator to the chart for clarity. To do that, go to the Insert menu, then Indicators, then Trend, and select the Moving Average indicator. Now in the Parameters section, change period to 100 and then change MA method to simple. By changing the calculation method and increasing the period, now we can identify the market trend with this moving average. In this strategy, if the EMA 10 and EMA 20 are both above the 100 period simple moving average, we know it's an uptrend, so sell signals get filtered out. And vice versa, if the EMA 10 and EMA 20 are both below the 100 period simple moving average, we know it's a downtrend, so buy signals get filtered out. In this example, you'll see that both moving averages are above the SMA 100 right now, so the only trade we can take is a buy. We identify the recent swing highs now. A crossover happened after that, but it was downward, so the signal is invalid since the trend is up, so we ignore it. The next crossover is upward, so we have to wait for the swing highs to break. That didn't happen in the next movement, so the signal loses credibility. We have got to wait for the next signals. Again, a downward crossover happened and the sell signal came in, but we ignore it again due to the uptrend. Another upward crossover happened and a buy signal came in, but we gotta wait for an upside break of the recent swing highs. That didn't happen in the next movement either, so this signal loses credibility too. The market then forms a new swing high, so we've gotta move our swing high line to the new swing. Again, a new swing high formed after that, so we've gotta eye the latest swing. We keep this up until after a buy signal. The recent swing highs break out and the candle closes above it. Once that happens, we take the buy trade at the close of the breakout candle. Now let's examine the chart history more and also figure out the stop loss and target. Since both EMAs were above SMA 100 in this example, the market was in an uptrend. So after the buy signal and upside breakout of the recent swing highs, we take the buy trade at the close of the signal candle. To determine the stop, use the low of the candle before the signal candle. And with a risk to reward of 1 to 1.5, exit the trade and pocket your profit. Now really focus on the next few examples to get a good grasp of this simple but effective strategy. But if you're still not sure how to make money trading, then check out this recommended video. It'll show you exactly what you gotta do to consistently profit in the markets.